Okay, hello everyone. Um, I think this one is going to be a little bit interesting. Um, I have been trying to think about way to continue to provide some really education because I really wanted this channel to be different than really the hundreds and thousands of channels that are out there. And I want to do this. I want to go through a setup that I was watching, and I know some traders traded it. I chat with quite a bit of traders on Twitter and outside, and I know some bought this stock. And I wanted to kind of point to why I didn't. It was on my list because I was curious on how it will end. Um, and I do that a lot. Um, if a setup is unfolding, but the entire pattern has something that spooks me, I put it on my list and watch it because I learn from how it develops. So Netflix was one, and let's go through that in details and help you try to continue to figure out how to develop your ability to stack probabilities in your favor. Because this game is all about stacking the probabilities in your favor. Obviously, it's not a game, there's real money that you're putting in, your hard-earned money, but it's a probability um, thing that you're working on. So let's dive in. Again, um, disclaimer, this is for educational purposes only, not a recommendation to buy, hold, or sell. Please do your own due diligence. All right, let's jump into Netflix. I'm not gonna go through Market Smith and go through the fundamentals. Fundamentals are okay, so, but that's not the point. I want to focus on the technicals of this setup and help you be able to do that on your own when you're looking at a setup and deciding whether it's setup that you want to get serious with or a setup that you want to avoid. Okay, let's start like we always do with the weekly. So I'm gonna jump into the weekly. I'm gonna teach you guys a neat trick in TradingView if you don't know it. If you're on the daily, this is daily chart. Obviously, you can click on the weekly here and go to the weekly, right? But if you want to move fast, there's a shortcut. You can do 1W, and then that takes you to the weekly. 1D takes you back to the daily. 1M takes you to the monthly. 1W takes you to the weekly. 1D takes you to the daily. You got it. So I kind of use that sometimes to navigate if I don't want to reach to my mouse and move it. It's pretty quick. Here's your weekly. Okay. The first thing that you want to do trading a stock, you want to look at the weekly. And when you see drops like this, that's the first big warning sign, right? Yes, we've had a crazy bear market in growth, and there's a lot of stocks down 60 and 70%. I get that. But that doesn't mean that you can disregard this drop and just pretend that it's not there. When you have a drop like this, there's a lot of people, a lot of money that is stuck, that is waiting to get back to break even. And this is not that far, right? This is a year ago. So it's really not that far. It's a steep, fast decline. There's a lot of trapped buyers on this side. And this way up, it never really went through the cycles. Okay. There was just not enough time to do cycling. The cycling, not that looks like that doesn't look like what I wanted to look. The cycling is really a way for selling to get absorbed. Okay. There's no cycling here. It's just, I mean, there's just a little bit of stuff here, right? But essentially, it's really a faulty deep base back rally up. This is 76% deep base. Okay, very deep. So that's your first warning sign. Yes, it rallies up and up and up and up and up. That's fine. There's a nice base here. You'll see it better on the daily. It's okay. I'm not gonna pretend that I don't ever trade deep bases like this. I do. In crazy bear markets like we've had for growth stock, I do trade them, but I'm aware that I am trading a deep base. Okay. And then most likely I won't be holding for an extended period of time. It will be for a swing, few days, few weeks. It's okay. Um, especially if the stock has the fundamentals, that's fine. You want to play it, you're expert enough, do that. If you're novice, if you're new, avoid them. Okay, you're not gonna get rich trading deep bases. Now, the other piece that I watch for is weekly candles. Weekly candles are a lot more important than daily candles. And if you don't know candlesticks, you should probably study or read some about candlesticks and the patterns. Steve Nelson is really good. That's who I learned from. This shooting star right here is a big deal. Okay, this shooting star on the weekly is a big deal. You're in an uptrend. You consolidate in 1, 2, 3, 4, trying to break out of a 4 week nothing base. There's no base for week. You get at least 5 weeks, and then you get slammed on high volume. When you see weekly candles like this, shooting stars, it's very rare that you recover quickly. You would need, at a minimum, to build a base. There are cases when you just go back up. That always happen. But remember, you need probabilities in your favor. Probabilities are when you put weekly candles like this on volume, you need to build a base. Best case scenario, or you're topping and you're going down. So you would need at least 2 more week down and start building that base. Now, Netflix was trying to do that, build a base here. There are positives in this development. There's really no selling after that big bar, right? And that's okay. But you want to give the price some time to absorb this selling here. Okay. So you want to be aware of this. And there's enough time that passed here. That's okay. It's fine. This is not a big deal now after 1, 2, 3, 4, 5, 6, 7 weeks. Okay. Now let's go to the daily and take a look at as to why I did not post this on Twitter and I didn't flag it. It was just on my list, but I had no intention of trading. I know traders that bought this coming out here, okay, on this day, right here, right here, right here. It's buyable, but I didn't. To the weeklies, the we just talked about, is a reason, and then also 2 more things on the daily. This is right here, wedging up. Okay, I needed to see correct the wedge before I get interested. So this is wedging. I don't like buying them that way. Now you can argue that this pullback back here is correct in that wedge. That's fine. The bigger piece that kept me away from this is this right here, this gap. Okay, this gap is resistance all the way down. Let's mark that as resistance. Okay, just you do not want to be buying breakout into that. You just don't. This was not a small gap. This was serious money exiting the stock. You, as a small fish compared to big institutions, why do you want to take the other side of the trade. This is not what you want to be doing. This is not what you want to be buying into. And this is why I stayed away from this. I put it on my list because I wanted to watch it and see what happens. Because I have seen this before and I continue to refresh my memory when setups are happening and I remember what I've seen before and I'm like, oh, what are the probabilities? High probabilities this is going to fail. And it did. Now, you can blame the market, you can blame all that stuff. That's fine. But you want to stay away from setups like this. If you, like I've said before, if you trade this setup 100 times, you will be a losing trader. Can it work this time? Sure, yes. Anything can happen one time. And a series of events over 100 setups, you will lose money trading this setup 100 times. Okay. Now, there are some signs that might have told you that it's okay to take this setup. There are some serious volume dry up here. No red bars. Volume dry up. Extreme volume dry up here. Okay. So it could have pulled you in to take the trade, but you want to look at the entire picture. Don't get fixated on, oh my God, I'm seeing volume dry up here. This trade is going to work. I'm going to take it, right? It's not like that. It's not one thing that makes the trade or break it. It is the entire puzzle. Your job is to put those pieces together. And the more pieces you can put together, the better puzzle you have and the better visibility you have as to where potentially this trade can go, the better probabilities you have. You're seeing this. I mean, just do the checklist. Negative, negative, wedging up, negative. Okay, you got a deep base, negative. You got the weekly up without the cycling, negative. You got, yeah, the gap, negative, right? Okay, and then you have these positive. Okay, how many positives and how many negatives do you have? What's your probability? So that's the way you want to start thinking about this stuff in the probability sense, and then um, play your odds and put on your trade. Study this, go back, watch this multiple times. Um, Again, there were reasons for you to potentially take this. You got a strong OBV. There's a lot of pocket pivots on the way up, right? But this right here, the gap, is a killer. You just avoid doing that, and you will avoid setups that will stop you out. Okay, so I wanted to take that chance to really point these gaps on volume, and you keeping that in mind when you see that next time, and avoid setups like this. Um, I don't know why I didn't see this here again, right? The base fast selling. So probably I've seen it, and that's why I probably skipped on this setup. But this is an okay setup where you get your one, you got your two, you got your three, and then here's your breakout right here. Okay, but I probably saw this at some point, and the deep fast selling base kept me away from it. And then I just kind of saw this again and stayed away from it. So hopefully that helps. It's a little bit different, and like I said, I want my videos to be a little bit different than what's out there. If there's anything else that you guys would like to see, put them in the comments. Um, Please like and subscribe if you haven't subscribed yet. And hopefully that was good. I really appreciate it, and I'll talk to you later. Thank you.